Welcome back to Talk Tickers, everybody. Today, we're going to be diving into FedEx's second quarter 2025 earnings call.
Yeah.
It's December 19th, 2024. The holiday shipping season is in full swing, and FedEx just dropped some pretty serious news.
Yeah, they did. It's a lot to unpack. So let's start with some headline numbers. FedEx beat earnings per share estimates.
Well, always good.
Always good news for investors. However, they did miss on revenue slightly.
A little bit.
But the real shocker was their announcement to spin off their freight trucking business.
Yeah.
And that really sent ripples through the market, and we saw the stock jump after hours.
You're not kidding.
Yeah.
It's a bold move, splitting the company into two publicly traded entities.
Okay.
So we're going to have FedEx focusing on their express and ground shipping services.
All right.
And then a separate company called FedEx Freight, which will be a major player in the less-than-truckload or LTL shipping world. Now, for our listeners who aren't familiar with LTL, think of it as a way to shift smaller freight that doesn't fill an entire truck. So instead of paying for a whole truck, you share the space with other shippers, making it a more cost-effective option for many businesses.
Right. And FedEx is betting that by creating these two distinct companies, they can unlock more value for shareholders.
Right.
Each business will have more flexibility to focus on their own specific needs, target their own markets, and really tailor their investments for growth. So it's a fascinating strategic move, particularly in light of the current economic climate.
Yeah, and we can't ignore the fact that they missed on revenue. And that points to some challenges in the broader economy. They cited a sluggish industrial economy, and since a big chunk of their business is serving other businesses,
Right.
that slowdown definitely had an impact.
Absolutely. But even with that revenue dip, they managed to increase profits year over year. And this is largely thanks to their very aggressive cost-cutting program called Drive.
Right.
This isn't just about cutting corners. They're using data and technology to streamline their entire operation from route optimization to fuel efficiency. And it's clearly working because they saved a whopping $540 million this quarter alone.
Wow.
Which puts them well on track to hit their target of $2.2 billion in savings for the fiscal year.
$2.2 billion.
Mm-hmm.
Talk about tightening the belt. But they're not stopping there. They're also pushing ahead with their Network 2.0 plan, which is all about optimizing their network for efficiency.
Yeah.
We're talking about consolidating facilities, integrating their ground and express networks, and really squeezing every ounce of value out of their infrastructure. They've already seen some promising results in Canada, where their pickup and delivery costs have dropped by 10% in areas where Network 2.0 is fully implemented.
And what's really impressive about Network 2.0 is it's not just a temporary fix.
Great.
This is aiming for long-term structural changes that'll make them more agile and cost-effective regardless of economic conditions.
Okay.
And get this, they're expecting to achieve a massive $2 billion in savings from Network 2.0 by the end of fiscal year 2027.
That's huge. It sounds like they're laying the groundwork for a major comeback when the economy eventually picks up. But they're not just sitting around waiting. They're proactively targeting high-growth, high-value segments like healthcare, automotive, and e-commerce.
Exactly. These are sectors that tend to be more resilient even during economic downturns, and e-commerce, of course, is a global powerhouse that shows no signs of slowing down.
For sure.
But it's not just about volume for FedEx. They're really emphasizing revenue quality,
Okay.
which means focusing on more profitable services like their specialized healthcare and automotive logistics solutions. They're also being strategic with surcharges like those for large packages and rural deliveries.
It's like they're saying, we're not going to be the cheapest option, but we're going to be the best.
Exactly.
They're really doubling down on delivering value, not just volume.
Absolutely. And this focus on quality over quantity is also evident in their approach to capital allocation. They're committed to reducing their capital intensity, which basically means getting more bang for their buck when it comes to investments. And they're continuing to reward shareholders with buybacks and dividends. In fact, they just completed another $1 billion in share repurchases this quarter.
So they're finding ways to please investors while also reinvesting in the business for future growth. That's a delicate balancing act, and it's one that Wall Street will be watching very closely.
Absolutely. And speaking of Wall Street, we should probably address their outlook for the rest of the year. They did revise their full-year earnings per share guidance slightly lower.
Oh.
Kind of a reality check, acknowledging that the industrial economy might remain sluggish for a while. However, they're expecting a stronger second half of the year, especially since their fourth quarter is traditionally their strongest, thanks to the holiday season.
Makes sense. It'll be interesting to see how consumer spending holds up during the holidays and whether that can offset some of the weakness in the industrial sector.
Hmm.
But one thing is clear, FedEx is in a period of major transformation.
Absolutely. They're streamlining their business, optimizing their network, and doubling down on revenue quality.
Oh.
They're facing some headwinds, no doubt, but they're also making some very strategic moves to position themselves for future growth. And the spinoff of FedEx Freight, well, that's a whole other layer of intrigue that we'll have to dive into.
You got that right. But before we get too deep into that, let's take a quick break and then we'll come back with our This Is Not Financial Advice segment. We'll have some fun with a hypothetical trade idea inspired by all this FedEx news.
Yeah.
Don't go anywhere.
All right, welcome back to Talk Tickers. Now it's time for that outrageous but plausible trade idea we promised. Remember, this is purely hypothetical, and just for entertainment purposes, we are not financial advisors.
Exactly. Don't base any of your investment decisions on our whimsical musings.
Mm-hmm.
But if we were playing with monopoly money, what kind of daring trade would you make based on this FedEx news?
Well, given the spinoff and their intense focus on those high-margin segments, I'd consider a two-pronged approach.
Okay, interesting.
First, a long-term buy on FedEx. The idea here is that as they shed the freight business and really hone in on their global express and ground strengths, they're poised to become even more dominant in those areas.
So you're betting that FedEx will soar even higher once it's free from the weight of that freight division, like a sleek, efficient delivery machine.
Precisely. And then for a little short-term excitement, I'd consider a buy on FedEx Freight, but just for the short term.
Okay.
There's often kind of a bump in stock price after a spinoff as the market tries to figure out the new valuation.
Ah, so you're thinking we could ride that wave of initial enthusiasm and then jump ship before things settle down. Sounds risky, but potentially lucrative. All right, disclaimer out of the way. Let's zoom out and look at the bigger picture. What are the key takeaways from this deep dive into FedEx's earnings call? What really stood out to you?
For me, it's their strategic shift towards revenue quality over volume.
Okay.
It's a subtle but important distinction.
Right.
They're not just trying to move more packages, they're trying to move more valuable packages.
I like it.
And their commitment to cost-cutting through D-Drive is really impressive. They're not just reacting to a tough economy, they're proactively transforming their entire operation to be leaner and more efficient.
Yeah, that D-Drive program is a game changer. They're using data and technology to make smarter decisions about everything from route planning to fuel consumption. It's not just about belt tightening, it's about working smarter, not harder. And their focus on high-value segments like healthcare and e-commerce is a brilliant move. Those are areas with huge growth potential, and FedEx is already a leader in those spaces.
Absolutely. It shows that they're adapting to the changing landscape of the global economy. They're not just relying on their legacy business, they're actively shaping their future by investing in the right sectors and building the right partnerships.
It's clear that FedEx is in a period of transition, but it's a strategic and deliberate transition. They're streamlining their operations, optimizing their network, and focusing on delivering the highest value to their customers. They're facing challenges just like any company in this volatile economic climate, but they're also demonstrating resilience, innovation, and a clear vision for the future.
It's a complex and constantly evolving story, and I'm eager to see how it unfolds. Will the spinoff unlock the value they're hoping for? Will their cost-cutting measures be enough to weather the economic storm? Will their focus on high-value segments pay off in the long run? These are all questions that will be answered in the months and years to come.
It's going to be fascinating to watch. And for all of you listening, keep an eye on FedEx. They're a bellwether for the global economy, and their journey is a reflection of the broader trends shaping the world of commerce.
Now, before we wrap up, we want to leave you with a final thought.
Something to ponder as you continue to navigate the world of investing in business.
FedEx is making a bold bet on the future. A future where efficiency, innovation, and customer value reign supreme.
Whether you're a seasoned investor or just starting out, there's a valuable lesson to be learned from their story.
Don't be afraid to adapt, to evolve, and to constantly seek new ways to create value.
That's the key to success in any market, in any industry, in any era.
And that brings us to the end of another insightful episode of Talk Tickers.
Until next time, keep learning, keep exploring, and keep diving deep.
So that wraps up our deep dive into FedEx's latest earnings call. It's clear they're making some bold moves to navigate a complex economic landscape.
Yeah, no doubt about it. And as always, we want to remind everyone that we are not financial advisors.
Right, this is all just our analysis and speculation.
Exactly. Do your own research consult with a professional before making any investment decisions.
Absolutely. But we hope you enjoyed this deep dive into the world of FedEx and that you learned something along the way.
For sure. We always have fun exploring these earnings calls and breaking them down for you.
And we can't wait to dive into the next one.
Until then, happy investing, everyone.